welcome to Head Start. My name is Reynaldo. You can get in contact with me at reynaldo.traddictiv.com. Please note that the following videos, clips, demonstration are for educational and instructional purposes only. Tradictiv provides these videos purely for the demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree the hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. So welcome to Head Start, dated today, May 28, 2021. So for those who are new, what we tend to do is looking at performance. I believe that trading is around 98% mental, 1% technical, and 1% basically physical. That's based on my own opinion as a trader now for the past 25 years. Started in 1996, went full-time in 2002. So I've traded every multi-asset class from stocks, options, futures, and then to Forex. So 98% of my trades are currencies, so the Forex market, and then 2% are basically the ES for futures, just to hedge certain positions and for longer term, very like some certain ETFs. But other than that, those are the only major ones I do trade. Sometimes I do trade as well gold, since I do look at the macro fundamentals. So each and every month, what we tend to do, in actual fact, once a month, we do a what we call it performance-based. So what does that mean? It means that we need to look at your overall performance since today's May 28, and this is pretty much the last day of the trading day, even though Monday actually is the last day for May. One more trading day, May 31st. But since I'm not going to see you, which you can continue actually if you wish to, but we're going to look in terms of your overall performance. So if you look at your trades for the whole month of May, how did you do? If you're going to rate yourself out of 10, 10 being the highest rating, 1 being the lowest rating. So for example, which I'm going to share my performance with you. I'm going to put, say, 9.5 for myself. Okay, so 9.5 for my level of performance. How about yourself? If you're going to do a performance review for yourself, what would it be? What would it be? Okay, so whenever you're ready, what would it be? All right, and then second question is what I'm going to basically what we tend to do here is what worked for you? What worked for you? So in my case, what worked for me is following the plan, being meticulous. So let me write it down. Being meticulous, patience, focus, confidence, responsibility, integrity. I believe those are the major ones that worked for me. Oh yeah, so risk management, money management, trading strategies, so right now, if I'm going to do the math, so basically what I tend to do this month, basically for for members is to see full transparency. We started basically with $500, and whatever trades that we put in will be put into that account, and everybody will basically, so everybody can look at it, and they can maybe look and see what's really happening. So mind you though that as a disclaimer, I'm here to give you informal advice. Past performance is not indicative of future results, and hence we produced basically 40% for the month of May, so which is really good, almost double from April. Okay, so basically that's what worked in terms of following the trading plan, being meticulous, being patient, focused, confident, responsible, integrity, following through, risk management, money management, and trading strategies. Last but not the least of which I will share as well is about following intuition. Okay, so those are things that worked. Oh yeah, and also controlling one's emotion. Okay, that's what worked. All right, so your turn. What worked for you for the month of May? What worked for you for the month of May? What worked for you for the month of May? Second is what didn't work for you. What didn't work for you? So what didn't work for me was being subjective due to making an assumption. Okay, so what does that mean? Let me give you a proper example right here. I believe it was the dollar CAD. No. One of the trades was the S&P 500, or basically the ES, and it was really good. Let me put it there. So we shorted here, this candle right here. Actually, my bad. We shorted right there. Dated May 10th. It was really nice. We catch the big move all the way down to 4,060. So yeah, it was really nice. You're about 100 points to the downside, and then we caught some move to the long side, and then closed it a little bit early. And what happened was, on a shorter term time frame, I started to short at 41.40, and then it kept going by the end of the day. No, right here, 41, yeah, 41.20, my bad, right here, because it was on a supply, and then it broke out the next day. So without being objective, since it's still based in an uptrend with a very good bullish force, the continuation basically happened. And so that's the thing about trading, is that when we stop being objective, and we're now utilizing our own sense of perception based on cognitive biasness, and becomes really subjective, and this is where it becomes dangerous. Why? Because when we are trading, we only see fit based on what we think and what we believe, but mainly in our own belief system. If we believe that it's going to go up, but in actual fact, the market doesn't care about our own belief systems, it only cares itself, and that is where we're going to be in trouble. And so from me shorting about 120, and all of a sudden it went to as high as 4,183, and actually for 184. So, but because of confidence being also the intuitive part right here, and actually I totally forgot to add one there. Intuition. Wait, it's right there. Intuition, confidence, and risk management through following one's trading plan. I knew that I basically made a mistake by going in early, and so the question now is, what can I do to minimize basically the risk? So risk minimization is an important element, that if you're also part of the strategy, creating strategies, like trading for me is like playing chess, by not giving away in terms of what you already made. So position sizing is a very important factor. And so basically from there, by creating multiple strategies to minimize the risk, and also calculating how much you're willing to risk. So I just basically put one micro lot in there. It's just a very small position, and because it is still going against something. However, because of such a big strong move, and knowing my own strategy, that it has to create some form of either a new lower low or higher low before it can continue to go to the upside. But nevertheless, when that doji basically happened, and then an evening star basically formed, so I basically left the position and I got out here 3 days later. So an averaging was also put into place as a form of strategy, and hence caught that move to the downside, and in actual fact got out at 4,065, so which 64, so which are really close to the bottom, and the timing was just perfect before it went back up, and now that's where we're at. So of course the level of experience plays a very big role in trading. Level of knowledge, but mainly the knowledge and experience plays a big role. So if you are novice or sometimes intermediate, in most cases when we trade, and if you based on that level, you only focus basically with one thing at a time, rather than thinking of the overall big picture of a strategy, what you have to implement, which I would recommend to have multiple strategies and not being unilateral with your way of trading. It's like, for me, like competing. If you're just moving defensively one move side, like backwards, the odds that you're still going to get hit is more than likely. However, when you start moving in angles in different direction, you can defend, you can attack, and hence you have multiple strategies from there. Remember that a defense can be an offense, and offense can be a defense. So by having multiple trading strategies will play a very big role. Okay, so but the major thing that what didn't work for me was the subjectivity to make an assumption, and it is basically a no-no. So from that is also getting overconfident with my trades. So when you get sometimes too overconfident, you don't follow your own set of rules. Remember, you need to have your own set of rules. As a trading tip, it is important to have your own sense of philosophy, your own set of rules that you need to abide by. But to abide by certain rules, you need certain values like integrity to follow through what you basically have to say to your own set of trading rules. So being overconfident with my trades that I disobeyed my own trading rules. Okay. However, it's also precautionary. There's still the precaution, because also in trading there is no right answer for it, because within that moment everything is the right moment. In other words, if, say, for example, you're trading here and you're seeing this, either with a 4-hourly time frame or, say, 1-hourly time frame, and you're seeing this, oh, it is bearish, and let's sell, but you're selling at a level of demand in an uptrend, no go. So you are going to be more at risk. Better to wait and be patient for the price to come back to level supply once it creates a clear picture in terms of the rules. Remember, there's certain rules of the market, basically what it does, and when that happens, you have a lower risk with the highest probability. Now, but if you choose to sell, then it's imperative to do as a test trade, because here, when something is at demand, they're supporting price points on this level, and you can see here too how strong those candles are, which means there are a lot of buyers supporting that price, and there's more demand than actual supply itself. Okay, so but within that moment, within that right moment, in the present moment, everything is right, whether you like it or not. It is mainly the consequence, basically here on the future. It's mainly the future is what we don't know. Future is always going to be uncertain. Okay, because it goes up, down, or sideways. Okay, let me minimize this to 10. Okay, so the future is where the uncertainty is, and this is where it creates the emotion of fear, creates the emotion of regret, greed, but mainly the fear-based aspect, and it also creates the anxiety or the impulsiveness. Okay, and hence through that, when a person is also uncertain, will always seek for certainty. We'll keep on looking on what else needs to be done in order to gain that certainty. Sometimes validation for some is very important, to be validated that they are going to be right, and if the ego of righteousness basically kicks in, and that is the most, or one of the dangerous part as well of righteousness in terms of the ego, and where cognitive biasness basically happens, then that's where people basically, or we all make mistakes since we're all humans, and as long as we have emotion, then it will play definitely a very big role with basically trading. Okay, so very important to note that as long as the future is unknown, we were always going to have that emotion, and we'll either make mistakes, or you're going to follow certain rules, rule-based, based on your own set of values to keep going, basically. Alright, so moving forward from there. So, your turn. What didn't work for you? What didn't work for you? And it is imperative as well, by the way, to really go through and have a look at your own trade results within the whole month, because this is the only one of the major ways to really see what you need to improve on mentally, psychologically, physically, and technically. So if technical is an issue, then this is where you have to go through either the system, going through their coaches. Remember, we have a really good educators here at Traddictiv, right? So, and you ask, email, So by you asking questions, hey, I didn't understand this. Look, this is based on my rules, or this is based on what I see. How can I improve my own technique? Would you be able to provide me for some assistance, coaching? Coaching, in my opinion, is a really important element. Now, if it's a psychological component or mental component, then this is where my expertise is, and I will be able to help you and assist you with that. All right? And so, next is finding the cause. What the cause to the problem that you faced in terms of the challenges, or that you basically faced with your trading. So cause here, being subjected to make an assumption. What caused me to be subjective? Well, it is mainly the ego of one, righteousness, perhaps greed, being impulsive, but mainly within that moment is that I just basically want to be right, and I know that it's gonna drop, but it ain't gonna drop. So if it's not gonna drop, then why short it? Remember, within that moment in time, though, it really was good to short it. However, I ignored the past. So remember that the definition of technical analysis is simply the study of price action, of price movement, to forecast future price action, price movement, using past and present price action and price movement. So if technical analysis is about forecasting, utilizing present and past price action, then it is imperative to utilize the data that is being given to you in that present moment all the way to the past. So technical analysis, if technical analysis is about forecasting, forecasting is not about predicting, because there's a difference between predicting versus forecasting. Predicting is now when you're using your own sense of your own subjectivity based on your own perception, right? That is very subjective. Forecasting plays a very big role of sense of objectivity, because you're using the numbers, and numbers don't lie, because by law they have to input whatever the price has been sold to the buyer. So right now 42.10.57, it's a timestamp. Say here the high of this one that had been timestamped at 42.16.86. That's purely objective, because that's a timestamp that has been given there and then in terms of that high price. So in other words, someone was willing to buy it at that price, at that high price. And in the low price, someone was willing to sell it at that low price. And the current price is whatever the price has been sold to and bought to by the seller within that moment. Right? So it goes, it needs to be stamped. So if that would be the case, now predicting, on the other hand, is not you're not using this data, you're using a prediction based on what you see fit. But you are not the market. You are just a player of the market that the market doesn't know that you're playing. So if you are thinking in that sense, and guess what? This is where you're going to have a really big problem. Why? Because it's your own base now of your own level of expectation. It's no longer the expectation that you should really not be expecting, because if you have that expectation, then you're now being very subjective. All right, so that's a very big distinction between the two. Forecasting versus predicting. So if you're forecasting, then you need statistics. You need to create that probability, a sense of probability of where price is going to go in the future. So if the probability is going to go to 4,200. If you can see that the price is going to go to 4,200, then what is the probability that it's going to reach 4,200? What is the probability that it's going to go back up to 4,220? So if you can create that number based on the data that's been given to you, on all the resources that's been given to you, then you can be able to create the amount of position size that you're willing to put in based on that probability, based on the risk. So in my opinion, that's the most important element. So if you would be able to do that, then your results will definitely change when it comes to your own sense of trading. So going back here, by using the ego of righteousness is no longer using statistics or the data. Why? Because I'm just making an assumption, expecting it that it's going to drop. I'm predicting that it's going to drop. I wasn't no longer looking at the chart, looking at price, that the price is more continuing to the upside rather than it dropping, right? Because there are charts of certain rules. Okay, so that is the cause. All right, so being overconfident with my trades that I disobeyed my own trading rules. So what is overconfidence? Overconfidence is now no longer being myself of confidence or being now arrogant. Arrogance is when overconfidence basically happens. It's no longer within that level of knowing oneself in terms of confidence. Despite the confidence here that worked for me, and when you get to an overconfident state where you have a sense of euphoria, then no go. It wouldn't work. Okay, so what saved me basically in that trade is simply what saved me based on this trade is the confidence of the overall trade. But to realize it basically on the end that like, oh, no go. I was shorting it where there's too much force, when there's a lot of volume in there. There's more continuation. The probability of the continuation of the price to the upside rather than to the downside is more than likely to happen. But because of my own sense of trading style and experience, that basically saved me, plus the position sizing or the risk management played a very big role. All right, so but going to the source is through there. So what is now the solution? Solution is to be objective at all times and to go back to my own set of rules. Awareness, not to be trigger happy, be humble, and always stick to who I am. Okay, so very important to note all these things. Mind you, by the way, in our courses, which you can purchase also via an e-learning course, I discuss this basically on the whole course itself in terms of your own belief systems, because your belief systems will either limit you or will support you. But because of the lack of awareness, and 98% of the whole population, the whole world actually are asleep, even though you think that you're awake, but in actual fact you're asleep, because in most cases we are not fully mindful of what we do. So the conscious mind actually overrules the subconscious. So there's two layers, right? You have your conscious mind that you see around you based on your what we call three aspects of conditioning: what you see, what you hear, and what you feel. And then it goes into your subconscious mind, which is basically your memory bank. So your memory is the one where it is recording everything that you see, what you hear, what you feel, and then you can create basically a belief system from there either a limiting belief or a supporting belief. A limiting belief would be, oh my God, this is hard. God, you're such an idiot. I can't believe I did that. So if you believe that to be true, then you create a belief system. And when it happens, and imagine it keeps reoccurring, and it affirms itself, then it's now being recorded and will be timestamped somewhere in there in your subconscious mind. But in most cases, what happens is that your conscious mind controls your subconscious, not the other way around. Now, once you start to be aware of your surroundings, you're aware more of your thoughts, then you can eliminate in terms of what your conscious mind is overruling your subconscious. So in other words, that if you're looking at a trade and you're going like, okay, this is bullish, I am not going to sell, I'm going to buy right at this point in time because of this, and you're not predicting where the price is going to go based on what you see fit. No go. Okay, so that is the difference between the two. And hence, if you know what your limiting beliefs are and you know what your values are, then this is how you can have an internal change in terms of your sense of programming to get the results, basically what you want. Remember that your results is just simply a reflection of who you are internally. It has got nothing to do about me as a coach or your coaches or the system that you are basically learning it from. The systems are just tools provided, given to you to give you an indicator or an indication of when to buy and when to sell that creates that probability. Now, it's up to you as an individual to dictate what to do in terms of what you're going to do with those tools. But if you are a hard-headed person and you just want to stick in terms of what you believe in, then those results are going to be very inconsistent. Make money, lose money, make money, lose money, and it basically goes in a circle. A vicious cycle, as what we call it in NLP or in psychology itself. So when you have this vicious cycle, and the question is, how are you going to break that cycle? The only way for you to break that cycle is having a self-reflection and part of a self-development component. This is part of your self-reflection. In my opinion, this class is maybe the most important class, and people always think that the trading system is an important element. No. Even if you asked other traders, they will tell you who's been, like, if they've been trading more than 5 years, psychology is what is more important than the system. Okay, you can have a heads or tails system and you can still basically make money. The question is, how can you control the 6 inches between your ears when you're actually trading? So if you have a good system and you have a good mindset, then it equates to great results. That is the bottom line, regardless. And I'm talking here not just in trading, sports, business, or whatever you basically want to do. Okay, that's the formula. All right, so that is the solution. Now, from that component, now I want you to create now your own solution that you're going to add in as part of your trading plan for June. We are now approaching halfway point of 2021. It's going very quickly, right? So if you really want to have good results, it's imperative for you guys to actually do this on a weekly basis, quarterly basis, monthly basis, and as part actually of your quarterly report is looking at your own sense of performance. All right, so do you have any questions for me? If you don't, please make sure I can get in contact at Reynaldo at traddictiv.com. Okay, so it was right there, Reynaldo at traddictiv.com. Okay, so more than happy to help you guys out. If you want to get beyond your 6 inches, then I would recommend for you to purchase the e-learning course on our basic trading psychology. Just go through the website, and yeah, you go through there. So if you have any questions, please feel free to email me. Other than that, thank you guys for coming in, listening to what I had to say. Oh yeah, and I'll give you certain tips, trading tips. It is important to meditate. It's been proven scientifically that meditation has certain benefits. Number one, it helps in terms of your level of focus. So if you're a type of person who thinks a lot and goes 1,000 miles an hour, mind you, this is how traders, in actual fact, traders who don't make money consistently, is they think too much. By thinking too much, it actually creates analysis paralysis rather than just entering the trade in and then managing the trade. But if they think too much, they miss the price, and then there's now the emotion of regret. So meditation actually helps that to clear off, to be in tune to oneself. When you're in tune with your oneself, then you are now practicing intuitiveness to get to basically be on the zone as well. To be in the trading zone is when your mind, body, and spirit goes in one, mentally, physically, and technically, and that's how you get to the trading zone. Okay, that's why it's important to meditate. Meditation, there are lots of different types of meditation. Actually, I also have certain strategies or techniques that I use for clients in terms of meditation for trading. But there's a lot of guided meditation that you can find on YouTube. So if you would be able to do that, that's great. I also do a style of meditation is also the hypnotherapy type, finding basically the cause of the actual problem. Because in most cases, if you don't have a coach, you won't be able to know the issues or problems that you have internally. Why? Because you only see 180 degrees that's in front of you. You do not see the 180 degrees that's behind you. So it's basically impossible for you to see the 180 degrees behind you within that moment. Remember, your conscious mind controls you when you're not aware, and hence you're sleeping even though when you're awake. That's why science has been proven that everything around you or what you see is just an illusion. Okay, an illusion because of the internal world that you have for you. Some people who are really fearful, it's a reality for them. It's a reality based. Even though for others, like, why is he or she afraid? There's nothing to be afraid of. However, within that person's world, they are afraid, and it's real for them, right? That's why there's a say that your personality creates your own personal reality, or your personal reality is driven by your own personality. Okay, so meditation, very important as a trading tip. So that's how you can improve your intuition, is through meditation. Okay, so I would recommend you actually to do that before trading, and also after trading during nighttime, just to be calm. When you're calm, you're at peace. When you're at peace, you can look at the markets objectively. But when you're not at peace, when you have a lot of thoughts, all of a sudden you're not aware of certain things, and this is how you're starting now to trade using your own perception. Alright, so that is it basically for me. Thank you so much. Take care until next time. Happy trading, and see you next month. Bye now.